The consensus on the FOMC has not moved to maybe so many hikes, but we are definitely going to do 3 rate hikes this year, if not 4. And you've been in the camp, a smaller camp that says, you know, 1 this year, I don't care if you do 2, but not much more for the next few years. What do you see that the rest of the FOMC doesn't?
Yeah, I would say the U.S. economy is in a slow growth mode, as it has been for the last 2 years. In 2015, the economy grew just a little under 2%. In 2016, the economy grew, I guess we got the number yesterday, 2.1%. First quarter tracking estimates are now down below 1% at an annual rate for first quarter GDP. This does not sound like a booming economy to me. So it's okay if you want to move, make a 25 basis point move, but we don't think at the St. Louis Fed that you have to have a 200 basis point adjustment in interest rates in this kind of environment. The unemployment rate has come down, but it was 5% in September of 2015. Today it's 4.7%. Hasn't really changed in the last 18 months. And we got the inflation number this morning, and as expected, PC inflation has come up. Some of that's energy prices on the headline, but if you look at something more sensible like the Dallas Fed trim mean PC inflation rate, that's running at about 1.9%. Maybe it'll tick up a little bit based on this report this morning. But it's exactly what the committee was expecting, a slow, gradual rise in PC inflation, net of energy prices, and that's exactly what's been happening. So we really have not seen a lot of movement in the hard data in the last 18 months or so, and so I think it's okay to raise rates a little bit, but I don't think we need a major adjustment at this juncture in order to stay on track and keep inflation near target.
Well, you said just a week ago that 3 rate hikes this year could be overkill. Why overkill? And what's going to happen? What's the risk?
This is not an environment where the data is screaming at the Fed that you have to move. It's not like inflation's threatening 3% or the unemployment rate is moving meaningfully. Like I just said, it's hardly moved in the last 18 months. So I think you can wait and see in this environment and see how things develop. And that's been the basis of the St. Louis Fed projection going forward.
So what about you said that the Fed doesn't need to be preemptive. The Fed raised the key rate once in 2015, once in 2016, and now it's talking about 3 rate hikes. That will be 5 interest rate increases in 3 years after a long period with none. Your colleagues are arguing this is so gradual. How could you worry about overkill? How could you be worried about being preemptive?
It's not overkill now, but if you go forward with a whole lot of rate hikes without the data really perking up more than it has, I would call that into question. Again, you got first quarter GDP here, tracking estimates below 1%.